So tapers off the table, that means buy everything, go long everywhere, right? Or is it more complicated than that?
Yeah, sure. Why not? I don't know that tapers off the table indefinitely. I think it certainly pushes it back a couple of months until the Federal Reserve sees the next round of employment figures to see whether or not schools fully reopen, whether or not the Delta variant has peaked and people are returning to work, as Steve suggested they might. But everything that we're seeing so far is affected by Delta, whether it's the jobs data, whether it's the consumer confidence data, whether it's the composition of stock market performance. It's all affected by these twists and turns, particularly among the unvaccinated, and how that's affecting regional economies around the country. So I think until we get clarity around that, I mean, there's no reason to panic with respect to equity markets, because if the Fed's not going to do anything for an extra couple months, it's more likely than not, unless the economy were to meaningfully slow down from here, that the equity markets will continue to do what they've been doing for the last several months.
So, Margaret, Ron says until we get clarity on that. But the lesson of COVID, to me anyway, is we're just not going to get clarity, right? There's just not going to be a point where we fully understand what's happening to us. Delta variant came out of nowhere and surprised everybody who thought this was going to be the big rebound boom summer. That didn't happen. Now we're in September. We still have no idea when the reopening is going to happen. Companies are postponing the return to office dates. Clarity is just not out there. So what do you do now?
Well, I mean, I think today's jobs report, which was, of course, surprising, just highlights how complicated this is. I think the message from the Fed has been, don't worry, we've got this. We're going to think about what the data points are telling us in terms of job creation, which is their number one priority, as we decide how quickly we taper and when we ultimately raise interest rates. So, from our perspective, it's more a function of execution risk is paramount right now. And it's always difficult to read the macro tea leaves, but particularly complicated right now because you have so many COVID-related complications that make the data look strange. I think that execution risk plus an expensive market by almost any measure means volatility in the months ahead with equities.